I drink probably 5 12-ounce Cokes a day, and that's about 700 calories. And I've been doing it more or less all my life. I can't imagine anybody that feels better than I do. I mean, I'm happy, I enjoy life.
Bill Ackman recently shed light on Warren Buffett's decision to purchase back Coca-Cola stock, implying that Buffett believed the company was undervalued and had a sound business strategy. William Albert Ackman, an American hedge fund manager, is the founder and CEO of Pershing Square Capital Management. As of January 2024, Forbes assessed Ackman's net worth at $4 billion. Its most prominent market plays include shorting MBIA bonds during the 2007 to 2008 financial crisis, suing Canadian Pacific Railway as a proxy, and owning shares in Target Corporation, Valeant Pharmaceuticals, and Chipotle Mexican Grill. From 2012 until 2018, Ackman was $1 billion short on the nutrition company Herbalife, which he regarded as a pyramid scheme disguised as a multi-level marketing firm. His efforts were chronicled in the documentary Betting on Zero. Warren Edward Buffett is an American businessman, investor, and philanthropist who presently serves as Berkshire Hathaway's co-founder, chairman, and CEO. As of January 2024, he has a net worth of $122 billion, making him the world's 10th richest person. ProPublica reported in November 2023 that Buffett had made equity trades in his personal portfolio involving companies in which Berkshire Hathaway also actively traded, citing tax data obtained by the agency. Buffett sold shares in Johnson & Johnson, Walmart, and Wells Fargo for $80 million in 3 transactions between 2009 and 2012. Although Buffett has not responded, Berkshire Hathaway Vice Chairman Charlie Munger denied the charges, saying, "I don't believe there's the slightest chance that Warren Buffett is doing something deeply evil to make money for himself." Bill Ackman, a hedge fund manager, is in a heated battle with Warren Buffett and his colleague Charlie Munger over Berkshire Hathaway's large stake in Coca-Cola. Ackman has stated that Coca-Cola has caused enormous damage to society and that the corporation has probably done more to create obesity and diabetes on a global basis than any other company in the world. There is a lot to say about Coca-Cola and the health effects of soft drinks, but Ackman's case does not sound very solid or cohesive. Is Bill Ackman retaliating? Ackman's remarks arrive at a critical juncture. Munger recently issued a scathing critique of Valeant Pharmaceuticals, a business in which Ackman's hedge fund has a stake. Valeant Pharmaceuticals stock has dropped more than 70% from its highs last year. Citron Research, an influential short seller, has accused the corporation of leveraging its commercial partnership with mail-order pharmacy operator Philidor to artificially boost sales through dubious accounting. Valeant Pharmaceuticals has denied any wrongdoing, but on October 30, the business announced the termination of its commercial relationship with Philidor. In addition, the United States Senate has initiated a bipartisan investigation into drug pricing, with a specific focus on Valeant Pharmaceuticals and its business model. Valeant is accused of aggressively purchasing other medication businesses and then boosting the market price of their product. Even if this method is not necessarily unlawful, moral and ethical problems remain a major concern with this company model. In an interview with Bloomberg Business, Munger stated that Valeant's plan is deeply immoral, dealing further blow to the company's efforts to rehabilitate its image and resolve its public relations issues. Berkshire Hathaway holds 400 million Coca-Cola shares, worth about $16.07 billion at current prices. Berkshire Hathaway is the largest institutional investor in Coca-Cola, owning more than 9% of the company's capital. Not only that, but Warren Buffett is a big lover of Coca-Cola, both the drink and the company. Therefore, Berkshire Hathaway and Coca-Cola are closely intertwined. Is Coca-Cola harming society? Too much sugar is hazardous for your health, and Coca-Cola contains a lot of sugar, which is beyond debate. On the other hand, similar statements may be made regarding several types of high-calorie foods and alcoholic beverages, not to mention tobacco, which is not only harmful but also extremely addicting. Coca-Cola does not only sell traditional drinks such as Coca-Cola, Fanta, and Sprite. The corporation has a large portfolio of 20 different brands, each of which generates $1 billion in global revenue, including diet variants like Diet Coke and Coca-Cola Zero, healthy alternatives like Minute Maid and Simply Juices, and even water brands like Aquarius, Dasani, and Bonaqua. In fact, the most recent additions to Coca-Cola's billion-dollar brand club include Gold Peak Tea, Fusi Tea, and Aloha's mineral water, which is offered in Japan. These three brands crossed the billion-dollar mark in 2014, indicating that Coca-Cola is seeing promising growth opportunities in healthy product categories. Traditional soda consumption has remained stable or even decreased in the United States during the last decade, as more individuals are concerned about calories and other health issues. Coca-Cola is responding to shifting consumer demand by introducing more low-calorie sodas, water, juice, tea, and sports drinks, among other options. Consumers are demanding healthier drinks, and Coca-Cola is competing with other corporations to meet this desire. Bill Ackman's claim that the firm is only damaging society because Coca-Cola contains too much sugar appears to be a stretch. Japanese bank Nomura has reduced Valeant Pharmaceuticals' price forecast from $220 to $175. This came after the company convened a conference call to address criticisms of its business model from legislators investigating pricing rises as well as regulators, and investors concerned about the company's previous tight relationship with Philidor, a shady soon-to-be-defunct specialty pharmacy. Valeant's business update call did not address all our outstanding questions. However, management's willingness to be as open as possible in its responses was a positive first step towards rebuilding credibility with investors. Malhotra, an analyst, wrote, "We update our model to incorporate operational disruptions as the company works to rebuild its specialty pharmacy network and deals with pricing issues in its neurology business." Philidor distributed Valeant products nearly exclusively, accounting for 7% of the company's sales. Valeant also paid $100 million for the option to purchase Philidor last December. However, now that Philidor is out of the picture for Valeant, Wall Street is curious as to how the business plans to market that product. On a conference call, Valeant's third largest shareholder, hedge fund billionaire Bill Ackman, claimed that the company could disclose a solution the next day. Buffett's investment decisions are frequently influenced by his fundamental evaluation of a company's financial health, management team, and competitive position. In the instance of Coca-Cola, Buffett may have thoroughly examined the company's financial statements, development prospects, and industry trends before opting to repurchase shares. His decision underscores his belief in Coca-Cola's potential to deliver sustainable long-term returns for shareholders. Bill Ackman's insights into Warren Buffett's decision to purchase back Coca-Cola stock provide a window into the mind of one of the world's most well-known investors. Buffett's action underscores his belief in Coca-Cola's long-term worth as a corporation with a solid business plan and global brand awareness. By repurchasing equities at what he believes is an undervalued price, Buffett illustrates his long-term investing strategy and confidence in Coca-Cola's capacity to provide shareholder returns. Furthermore, Buffett's judgment emphasizes the importance of fundamental analysis and intrinsic value in investing decisions. His strategy, which is marked by patience, discipline, and a long-term outlook, acts as a guiding concept for investors looking to accumulate wealth over time. Overall, Ackman's revelation emphasizes the importance of understanding the reasoning behind investment decisions, particularly those of experienced investors such as Warren Buffett. Individuals can obtain significant knowledge and perspective by studying successful investors' tactics and insights, which can then be used to inform their own investment decisions and navigate the complexity of the financial markets. Anyways, what do you think of this? Please remember to like the video if you thought it was informative and helpful. Please leave your comments, subscribe to our channel, and check back for more thought-provoking videos.